Hello everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infinox on Friday the 30th of September, final day of the month, final day of September. September is historically a horrendous month for equity markets and we've seen that has definitely played out. We've got 3 charts to look out for today. We're on the sterling dollar chart, so we've got a bit of a recovery but obviously just unwinding some massive oversold positions. We're also looking at the oil chart as well today, seeing how that recovery is just progressing but starting to maybe falter again, and also looking at the lack of recovery on FTSE 100. So looking first of all at this sterling dollar chart, massive sell-off Friday and then Monday, and then the Bank of England stepped in, supported markets a little bit, and then yesterday the announcement from the UK government that the OBR, the Office for Budget Responsibility, is going to publish their forecasts, which helps to stabilise sentiment as well. So we've seen a rebound in sterling dollar overnight and breaking through the resistance at 109.30. That was an important level yesterday. It broke out through that and then started to unwind back towards the 112s, maybe even 113s. There's not much resistance until there, and we've seen that 112 overnight has been touched. It could well be that the market continues to sort of buzz around here and then test that 112 to 113.50 area. That's overhead supply, old lows become new resistance is the issue for sterling dollar here. We have this recovery set up on the 4-hour RSI, so we are still in this recovery mode. Breaking out and holding above 109.30 is the important move that we've got on this move at the moment on sterling dollar. So holding above that level continues to sustain the recovery momentum, and holding above 50 on that 4-hour RSI as well. If you moved below the reaction low at 107.60, that is obviously starting to see that move decisively rolling over again. So that would be the risk to the downside. But certainly at the moment, we are still holding on to this. This is a bit of a consolidation candle this morning, a bit of a wait and see moment. But as I said, back towards 13.50 could easily be seen, as there's not a great deal of resistance until there. And this obviously is sharply unwinding this daily RSI. Now, this oil chart is really interesting. Overhead supply is a consistent theme for oil. Old support becomes new resistance on these oil recoveries. We've seen this in a consistent basis throughout this big downtrend that we've had on oil. We had the old lows back around the mid 93, 94 area up towards 96. They were the resistance back in September, early September, but the old low that came in around 88.25 to 89.70, that is now overhead supply as well within this new sharper downtrend. So the question is this a point at which we start to see the market rolling over? Is that the downtrend, and is that the overhead supply? That is the question. 89.35, 89.50 area is the important resistance overhead. 89, sort of anything above 90 big figure, that you start to see this recovery maybe gathering momentum into that next level of resistance overhead. So what we have is this RSI back into the low to mid 40s. There is scope for more in this recovery, and that would be the issue. I would say is that most of these recoveries tend to move back into the 50 area on this RSI. So maybe there is more scope for a near-term recovery to break this downtrend. That is the question. If it can get in above that 90 mark, then you're looking at the mid 90s again. So that is potential for this recovery still. But the overhead supply of this near-term resistance is in place. Now, if you look on the 4-hour chart, if you fall below this reaction low here, which was, if I get the crosshair on it, around about the 87 figure mark, if you start to see 86s on Brent Crude again, I think that is then this bull move falling over. You've got the 4-hour RSI, which is still above 50, so it's sort of hanging on to this recovery at the moment, and it's sort of considering the next move, but certainly is not far off, still moving straight through that 89 figure, the 90 bucks area, and then into the mid 90s again. And finally on FTSE 100, well, we've seen such a massive sell-off throughout September, huge move to the downside, moving below that 69 to 70.10 area of resistance, this purple area that I've got in here, and a retest of that reaction low from the big move to the downside following on from the war in Ukraine. 67.55, that is the level that could well be tested, but the market is oversold. 27 on this RSI is where we're seeing that is stretched, historically stretched, but again, it's very negatively configured. So it is obviously in this downtrend phase still, and obviously the big sell-off yesterday that suggested that the buyers are really still not ready to come back in. So you've got the resistance overhead 69.69 to 70.10. That is the basis of overhead supply. It needs to get through that, and ideally back above 70.80, which were these reaction highs earlier in the week. 70.80 is the resistance overhead, but obviously that's the key level to break out if we're going to see a decisive recovery. But at the moment, looking like selling into strength in any sort of recovery back towards that overhead supply 69.69 to 70.10. So with that in mind, I wish you good luck in your trading today, and I'll speak to you soon. Thank you very much.